Yeah, look, at the end of the day, it's not about regulation, no regulation. What it's about really is participants in the market, right? The word institutional, when I started in the crypto space professionally in 2015, nobody talked about institutions. We talked about retail users, we talked about SMEs, we talked about traditional fintech market participants. Over the last 5 years, in 2018, 2019, we went through this massive phase where the institutions were coming. Everyone wanted to work with banks and large pensions and endowments. But when we use the word institution, I want to actually challenge the notion of the idea of an institution. Individuals are becoming institutions because of crypto assets. There are a few different ways that we might define an institution or an institutional allocator. Typically, if you're a FINRA registered representative, it would be on the basis of the asset pool, the size of the asset pool they command, right? If you're over 2 million in net worth, if you're over 5 million in net worth, if you're over 50 million, that's what qualifies you in these certain designations. And I would actually challenge the notion that institutions are macro funds moving into the crypto space. There are a number of institutions in the crypto space, including my firm CoinShares. We have 5 billion in assets under management. Some of our peers have 10 billion, 50 billion, 100 billion. I think we're going to see over the next 5 years, trillion-dollar asset managers emerging that are native to crypto. So I actually think crypto is changing the very definition of who the institutions are. And I will tell you right now, our most lucrative clients aren't traditional institutions. They're crypto native institutions who are looking for products and services that bulge bracket banks, PBs, and other service providers just simply will never be able to give them. So I actually think what we're seeing is a redefinition of what it means to be an institution. And crypto allows for a much broader range of different types of institutions to participate. But as a result of the market just growing so tremendously, crypto is now almost a $2.5 trillion asset class, right? That's really profound. And all of the firms who've been involved in its participation, I think, are going to be the institutions of the future. So I'm not trying to pander to pension funds or endowments, who want to pay 2 and 20 for passive net long Bitcoin exposure. That's a dying business model. I want to work with crypto native institutions who are looking to do really innovative things on chain that weren't possible with all the dusty old tools that bankers and PBs have. Like, the world is changing. We operate in a market that is open 24/7, 365. Everything we do is 100% electronic driven. I have no OTC. We don't have people calling us. This is truly a global permissionless 24/7, 365 market. And so to serve institutions in this market, we have to reconceptualize what that means. So I just want to challenge that notion, maybe as an opener, especially since I have, SkyBridge and then Ross here. They probably see the world very differently.
It's not that I see the world per se differently than what you're saying. And I think what you're saying is very valid as we see this, but Apple is worth basically the same as the entire crypto market today. And so when you put into perspective the amount of money that institutions actually control and what that represents as an opportunity for Bitcoin and everybody in the crypto space, that's the way we look at it. We're a gateway for investors who invest in traditional assets that want to invest in crypto assets. We're not doing a 2 and 20 fund. We have a relationship with Gemini. We open up individual accounts so that our clients own their own Bitcoin, and we simply help them do it. We're the first firm to managed individual Bitcoin accounts with Gemini. And every day we're working on this because it's still very challenging to do it. And it's super exciting time because I think for institutions like ours, we're offering clients the future because I agree with the way you see the future, and we're transitioning into the old version of what an institution is into what the new version of what an institution is. So I like to think that I'm the first firm or one of the top first firms to be doing this. So I agree with where you are, but that's not where the industry is. And now it's shifting. And I look at my firm and SkyBridge are the firms that are really the first ones to go all in and say, we're going to do this.
Yeah, I think what's very exciting about this moment, right, is there's a ton of capital in traditional pools, right? That goes from, individual client accounts to, pensions and endowments funds and everything in between, right? And so, our firm and many others, right, we're I think we will all agree on this call that we're in the early innings of what digital assets can be, and really what Bitcoin can be, right? And I think we are, helping implement that first allocation for thousands of our clients, right? I mean, we own Bitcoin in our multi-strategy fund that has, on a look-through basis, 15,000 plus clients, right? So like that's a pretty special thing, right? You brought Bitcoin to those individuals in a small way, right? They own that fund as part of their overall portfolio, but they have a Bitcoin allocation now, right? Which is like a special thing, right? And I think we're in the early innings of that, because there are many, many, many firms, asset managers and wealth managers that just aren't there yet. I think that'll change.
Well, it's like we're not even in the game yet, I would argue. Like,
Right.
I mean, I can't even tell you all the pushback we've gotten from the traditional institutions for what we're doing. I mean, like literally they'll call us with like 100 lawyers on the line going, what the hell are you guys doing? And I'm like, see you guys, and we've severed our relationships with some of the institutions, or our current relationships, so we can continue to do this, because there's actually a pretty big movement to stop it from those traditional firms, because it's really is a threat to their businesses. And
that's
so
that's 7 years for me, Ross, like of doors being shut in your face. I think part of it is
let
also.
me just say one more thought.
Yeah.
So I think one of the things the OG people have to remember is that the vast majority of the public has no idea what this is. I mean, there's still people getting Netflix discs sent back and forth to their houses. I think like 3 million people. So like it's firms like ours that are really introducing crypto to the broader masses and educating people even what this is. It's that new. And so I think that, it's going to be a very interesting decade for, firms like ours that are making that transition. And it's going to be a really difficult decade for traditional banks and broker dealers that don't get into the future of finance.
And guys, let me push you on this further, because, to hear you guys tell it, it's a no-brainer. It all makes sense. While we were on the chat before it started, Meltem, you were saying, gosh, there are still people who are holding all their money in dollars. Don't they know about monetary debasement? And I was just thinking, well, some of these people, it's as simple as an issue of trust, right? I mean, I've been writing about this space since 2011, and I noticed that with a lot of folks, the minute you mention, it's not FDIC backed, it's not banks, you're cutting out banks. The minute you open that door, folks say, well, I want nothing to do with this. It doesn't seem safe to me. So
that's an easy one to shut, though.
What do you say to clients?
The FDIC went bankrupt in the financial crisis. The FDIC doesn't exist. That's a fucking fantasy. Okay. So rule number one, any promise the US government makes is a fantasy. We don't have any money. We have 30 trillion in debt. So if the banks go under, if JP Morgan goes under, FDIC covers 0% of it. We saw this happen. It's just a fallacy. The banks are the worst run institutions in America. They've been nothing but stealing from people from every way they can, from fees and this and that, and opening fake accounts. To think that that's some level of safety with your money is the biggest fallacy I've ever heard. Ever. And I've been through how many freaking financial crises? How many have we had?
So Ross, I would probably articulate that slightly. So I get really spicy when I talk about crypto. When I talk about banking, I think the really hard part, Dan, is most people, most institutions in particular, right? They don't have to compete. They have a direct pipe to the money printer, right? If we look at what happened during the COVID crisis, all of the PPP that was distributed, banks were charging 5 to 7% on it.
That's correct.
So they have a direct, the way that money flows, it flows from the Fed to the largest commercial banks, to smaller regional banks, to smaller payments companies and other intermediaries. And eventually at some point, right, after everyone has taken their little piece, it gets to the end recipient. And to me, I think the harder part is, and this is why it's called the rabbit hole, right? Like the crypto rabbit hole is a very real phenomenon. You start at the top and you're like, you start with a simple premise. It's funny. My dad said this to me the other day. He's like, I just wanted to buy some Bitcoin. And I ended up going on this like 3-year journey down a crazy rabbit hole of understanding how money works, how the monetary system works, understanding the Fed, understanding banking crises, even like a discussion of what money is. I think at a basic level, the conversation we're really trying to have, Ross, Stan, and I think you've articulated this to some degree, is the printing press, right, which was like one of the major technological shifts in our world that accelerated a big trend. What the printing press enabled was the separation of state and religion, right? What Bitcoin is enabling, cryptocurrencies are enabling, is the separation of money and state. And so I think at a fundamental level, what we're trying to do is a really challenging cultural and social paradigm shift that's just going to take a long time for people to internalize, because change is really, really hard. Like, it's really, really hard for humans to incorporate new information. The fact that we use these little supercomputers in our pocket, like, this took 20 years. So I just think it will take a long time for crypto to work its way through the system. But really what we're attempting to do is, to me, the most profound thing I can be working on. It's the separation of money and state. And to most people, that is unthinkable, right?
Absolutely.
It's disgusting, it's unthinkable, it's scary, it's messed up. They're like, wait a minute. It just completely shatters their perception of the world. And so for them to even acknowledge something like Bitcoin is a complete violation of everything they have ever been raised and taught to believe.
Especially in America.
Especially in America, yeah.
But, you know, ironically, money started as gold, and it was stateless when it started.
Yeah.
The only reason money became an instrument of power by the state was because they could make it that. And so when you go back to 1700, people fought over gold. It didn't matter where the gold came from or whose gold it was. So Bitcoin, and I said this the other day, you know, the US dollar was really Bitcoin in 1780. Okay. So if you would ask the British what they thought of the US dollar in 1775, they would have said, it's fucking Bitcoin. You know, like, what are these rebels who are making their own money?
Yeah.
They controlled everything. And they were like the worst people in the world. Right. And so it's like they have slavery and they have killing and they have all this stuff going on. And it was like, you want to make your own money? So I don't see it being any different. We're just going back to when money was stateless. And there's a huge power to that. And that's this power shift is what you're talking about. I 100% agree with that analysis.
Ross, when you go down that road and you say, you know, all these things, it's funny. It's almost hard to believe you were someone who a couple of years ago, you know, and I know you like to shirk Wall Street, but a traditional investor, someone running an RIA, you know, a Tesla bull, you believe in Tesla, you believe in cannabis stocks, you know, prior to crypto, those were the two biggest investments we were known for. Now, maybe that goes hand in hand with crypto, but Dan, if I kick it over to you with SkyBridge, I mean, you know, here's a traditional hedge fund in some ways, you know, then you have Mooch at the top and the politics, but in some ways now doing this Bitcoin fund, have you guys heard from people, heard from clients who, like Ross was saying, have basically said, what are you guys doing? What are you guys doing here?
Well, you know, it's actually really surprising because you make an investment like this and you're not sure what the client reaction is going to be. And I will say it's really surprising. Of thousands and thousands of clients, you know, I could probably count on one hand the folks who have pushed back aggressively on the exposure, which is really, really interesting because what I think that means is that, you know, folks are generally interested in it, but they don't know enough about it. They don't know how to put it on. And so if you have a trusted advisor that's putting it on, like most of our exposure is through our multi-strat product, which invests in a lot of different things. So you invest in that product today, you're getting exposure to a handful of different strategies along with Bitcoin in our macro book. And so I think that client reaction, you know, says, hey, we're interested and, you know, we want to have some exposure on, although maybe we're not comfortable enough to put it on ourselves yet, which is the opportunity, which is the business opportunity, I think, for folks that are
that's what we're doing.
Access products. Right?
Yeah, but I would just counter that and say this is also a very US-centric conversation right now. If we look globally, we've been issuing exchange-traded products in Europe since 2015. We were the first asset manager in the world to issue a passive Delta One Bitcoin exposure. We were the first to introduce an Ether product. We've now partnered with 3iQ in Canada on a new Bitcoin ETF and a new Ethereum ETF. Like, the fact that retail buyers in the US want to access crypto can't do it through the largest channel in the United States, which is arguably the largest channel in the world. It's the retirement account channel, right? Yep. It's very difficult unless you go through someone like Ross's firm, an RIA, or you go through Choice or another platform, like you can't put crypto in your retirement account unless you're buying a product that trades at a massive premium or a massive discount. To me, the fact that like we haven't done anything to improve the state of market access in the largest capital market in the world is really shameful, because the person it's disadvantaging is not the institution who's buying the product at NAV and then selling it to retail at the premium. It's harming everyday consumers and everyday investors and savers who actually need access to this opportunity the most. And so in my view, like, the US just feels so far behind from an asset management and exposure perspective. The regulatory paradigm's been incredibly slow to evolve. Traditional asset managers and banks have been really slow to adopt and integrate this technology. And then the fact that a firm like HSBC, right, which has been embroiled in more financial scandals than I could even list here, has the audacity to stop their clients from trading Coinbase or trading MicroStrategy, which are equities that provide synthetic exposure to the crypto sector. It's just so incredibly demoralizing. It's pedantic. And if I was a retail investor, I'm a retail investor, I'd be pissed.
Yeah, but you're discounting a very important thing that we just talked about. You're talking about taking the power away from China and the United States. Okay, both of these countries are in a war for the economic soul of the world. And so when you're talking about HSBC, for example, that was just taken over by the Chinese, there's a bigger reason they're doing this, because Bitcoin is a threat to China. It is a threat to our system in many ways. And the established players in these systems who are well deep in our government have zero incentive to see this be successful. It's an absolute threat to sovereignty. In old days, if you printed your own money, you would go to jail. And they should be jailing people like they do in Turkey, right? And
let's not jail anyone, Ross. I don't like where this.
If you're the government, think about it. If you're the government,
right,
you're losing your financial power to a bunch of rebels. Okay. And that's the way they still look at it. And so there's no incentive for them to help us. Every step of the way has been the opposite. We've had to overcome and innovate around the barriers that are being put in place to Bitcoin's success. And that's why it's become so powerful, because the innovations made it better. So the people who ban Bitcoin make it stronger, and they don't understand.
So
And
for
guys-
us and alone Bitcoin fund, I think you guys will get a kick out of this. Like there are certain banks that won't send client wires for subscription into our fund. So
we
it's
had that
client
issue too.
money, right? So
We had
that's
that
wild.
issue too.
You know, and the client's like, well, what do I do? We're like, well, you have to move those US dollars to another financial institution that's happy to send it. But I mean, that's crazy, right? It's a client's
Right.
money. They want to send
They
a
came
wire.
up like with a new form too. They're like, oh, your clients have to sign a new form to do this. Like the idiot.
Okay, so I
investment
don't have any of these issues. I use USDC. I use on-chain money that belongs to me. It's controlled by my private key. This is the future. I haven't sent a wire in like a year. It's great.
Well, let me ask you guys, Meltem brings up Canada and some of the things the US has failed to do. We are under the guise of the Wall Street discussion here. And I want to make sure that I bring up the question of the Bitcoin ETF. You know, Dan, we had Anthony on Decrypt a month ago predicting that with Gary Gensler in place, we'll see the Bitcoin ETF approved. Maybe, but I do keep telling people, just because he has taught a course on crypto and knows about crypto doesn't automatically mean that he'll be pro-crypto. The other question I ask you all is, now that Coinbase is public, there was all this talk about the Bitcoin ETF, but might some people who want to get exposure to Bitcoin without having to buy Bitcoin just buy Coinbase stock?
Yeah.
I would say so. Look, we have an ETF in front of the SEC, as you know. Look, I think we're still, we still think that there's a good chance it's a 2021 event. So, we're hopeful. And then, just to be brief, I think, yeah, you could buy Coinbase, but there's nothing like owning Bitcoin direct, right? And so, I think if you have some investors that are just refuse to own it direct, right, then fine. But I think it's always
Right.
best.
I think the biggest opportunity, though, is retirement accounts. I don't want to, miss that important issue here. There's over $30 trillion of retail assets in retirement accounts. For most people, the value of their home and the value of their 401k are their primary nest eggs. So for me, the holy grail and the focus this year is I want to get Bitcoin into every retirement account. We're doing it in Europe and we're making good progress there. We have 5.3 billion in AUM. I want to get Bitcoin into every retirement account in America. I want to get into every retirement account around the world, especially in the face of growing taxes. People need a way to invest in Bitcoin through traditional channels. And if the ETF allows us to service the retirement account market, I think it should be the number one priority.
It will.
It has to.
You know, I actually have my own ETF in front of the SEC right now too, which should launch very soon. We're in a quiet period. That being said, I absolutely think that they will approve Bitcoin ETFs very, very soon. And I think the reason is there's too much money in it for the firms not to have a product. And the SEC knows that by not having a regulated product, it just pushes more people into the unregulated markets. And so I think they finally have people at the SEC who understand, but I think the main thing holding it back was liquidity, was if an ETF takes in $2 billion in assets in 3 days, can they buy enough Bitcoin? Because ETFs have to follow certain rules and they're quite complex. Like now that I'm doing an ETF, I can tell you it doesn't work anything like you think it works. Okay. It's super complicated. It's not like you're just buying a stock. And so that's the part, the mechanics of it is what I think is held back because Bitcoin was such a new thing. But now that we have institutional owners like Coinbase and Gemini and many others that are huge multi-billion-dollar firms, I think, and what Tesla has proven is that an institution like Tesla can go in and buy $1.5 billion in Bitcoin, sell it, and that's why he sold some the other day. Elon proved, he said, I sold 200-300 million in Bitcoin, no problem the other day. And he proved that this is actually a real asset that's liquid. And I think that's what the SEC needs to approve this. And so we're kind of betting on this in the sense of whether it's in the next 6 months or in the next year, it's going to happen. And investors want to be in Bitcoin today because once there is an ETF product, you're absolutely right. It's going in retirement accounts, like in every firm probably in the country. The only problem, I don't think it's the best way to own Bitcoin, but that's my opinion.
Agreed, but the large asset managers will have some of the resources to educate. And I think it's not just Bitcoin. We see a ton of demand for Ethereum as well.
Right.
Seeing more diversification and investor appetite growing because they're getting educated, right? The fact that all of the bulge bracket banks are now publishing research on crypto is a huge step in the right direction. And then Ross, as we were chatting about in our pre-panel, FinTwit, right, is the number one marketplace for ideas in the crypto space. This amazing conversation happening all day, every day around the world on Twitter in public, like talk about an amazing channel that is just so motivating, so inspiring, so educational. I learn so much on Twitter every day. It's incredible. I'm all about it.
Sometimes Meltem, I learn I don't want to be on it anymore, but
Meltem, give me a favor. We only have a few more minutes, but you mentioned FinTwit. I have to ask you guys, especially, both of you, Ross and Meltem, I've seen the trolls in your mentions. At this point, if you have enough followers, you tweet something about Bitcoin and you get all these replies, what about Doge? What about Doge? I have to get from all three of you your take on what is happening with Doge. Today, I've got media asking me, well, it's a joke, right? And I have to say, yes, it's a joke, but the price is going up.
You want to start with this one?
I can start this one. Here's my view on Doge. Look, the whole conversation we just had is about money as collective fiction and collective belief, and this idea that money and state are separate. If a community of people get together and decide that something has value, all a market needs is buyers and sellers, right? If I have a buyer and a seller, I have a market. And the fact of the matter is, like right now, there are a bunch of people who are buying Doge and there's a market for it and venues are listing it. So if we believe in the premise of permissionless financial innovation, like who am I to deny Doge? I'm not buying it. My firm doesn't offer Doge products. We're not publishing research on Doge. But if a community of people get together and they want to meme something into existence, just like we did with Bitcoin, by the way, the last 8 years I spent in this community, we've taken something that no one believed in and turned it into a monetary network with over $1 trillion of value, all through the power of belief and conviction. Like, that's what's happening with Doge. Is it going to be long-lived? I don't know, but Doge has been around for a hell of a long time and it just keeps getting weirder. So in an odd way, like it almost kind of proves that if people get together and they want to make something happen, like, this is the Wild West of money. Like, have at it. Not for me, but to each their own. I'm not judge, jury, or executioner.
Self-fulfilling, right?
Yeah, that's a safe answer. You know, I'm a big believer.
Call out, Ross. Call out.
Well, you know, you didn't want to say what I'm going to say, which is, unfortunately, most people are going to lose money on Doge because there's no utility. And the thing about Bitcoin, and since I've been involved with it now for 6 years or so, I think the challenge is building utility in the system. And what really helped Bitcoin take off this time was when Square and PayPal said, we're integrating this into our payment systems. This is really what's taking Bitcoin. And then with Ethereum, it was the NFT craze and the idea that the smart contract business is really going to be a fast growing business. So for us, we look at these assets and we say, where is the value derived? But when you look at something like Dogecoin or one of the many other coins that anybody can gang up and start buying, to me, it's musical chairs, it's Beanie Babies. You know, I was around in the 90s when, you know, Flipper the whale was worth $5,000 and everybody bought into the Beanie Baby community and Flipper the whale. No, it was Tobago. It was Tabasco. Tabasco, the whole
I had Chocolate the Moose.
Tabasco was worth like 5 G's. And there's people still holding Tabasco, hoping that it'll come back. So when I say to Dogecoin owners, yeah, totally. Listen, I keep my Beanie Babies still because it's so important to remind yourself, like, it's so easy to get caught up in a gambling game, and that's okay. If you sell and make money, great. But for every winner, there's going to be a loser. And you have to understand that about trading, that for every winner of Dogecoin, there's going to be a loser because there is no utility being created. So over time, the ultimate result isn't good. And so I think if somebody comes in and starts developing great Doge, you know, products, maybe it'll survive. But, you know, let's be real. So I warn investors, remember the difference between speculating and investing. And as long as you understand that, you could do well with this Dogecoin, and I wish you luck. But I also own a lot of the MGM casinos, and I'm in the online gambling business. I have no issue with people gambling if they want to gamble. You just have to understand what you're doing.
Dan, congratulations, because I want to end with, what is SkyBridge's view on Doge?
So we don't own any Doge. I don't expect that we will own any Doge. Never say never, but but we don't any today. We don't own any today, and we're not doing the work either. I think that's a simple way to say it.
When we had Anthony on Decrypt a while back, he said, "I'm really sticking with Bitcoin, the big dog." And of course, on Twitter, all the responses were, "The big Doge," and we said no. Now, Ross, worth also mentioning, you say Dogecoin not a utility. We started the day with Mark Cuban, who spent a lot of time insisting that he thinks it is a utility. So,
well, he's trying to sell, you know, merchandise for his team that's not doing that great through Doge. I get it. Mark's one of the most creative marketing geniuses I've ever known. But look, I've told a lot of people this. If they're going to give it to you, why not take it, right? So Cuban's very smart, and I like what he's doing. But, you know, it's also to his benefit if you're selling Dallas Maverick tickets to take whatever you can take because, you know, they're okay, you know.
Guys,
hopefully the Lakers will take them this year.
Go off.
I'm a Lakers guy, man.
Brutal.
I'm a Lakers fan. So Mavericks are kind of, you know, we compete.
We got to wrap it up. I wish we had much more time. The three of you have been so great. Meltem, Ross, Dan, thanks so much. Thanks to everyone who's watching Ethereal. And up next is Nifty Gateway with our publisher, Alana. Thanks, guys.
Thanks.